Good afternoon, everyone. Thank you for joining us today for our live webinar, Telework and Taxes, What You Need to Know. My name is Melissa Zampatella, and I'm the Executive Director of the Alewife Transportation Management Association, TMA, and Managing Director for MassCommute. And joining me today to facilitate the webinar, we have Kelly Marsacci of Transaction Associates, Sophia Gallimore, the Director of the Watertown TMA, and our presenters, James Kozik, a certified public accountant, and Dana Ackerman, tax advocate for the Massachusetts Department of Revenue. Today's webinar is brought to you by MassCommute, and MassCommute is a coalition of the 16 TMAs serving Massachusetts. TMAs are nonprofit membership organizations made up of businesses, institutions, large multi-tenant office buildings, and even residential complexes located in a defined geographic area. And our mission is to work together with our members and local partners in an effort to increase mobility and commuting options while reducing traffic congestion and air pollution. Together, MassCommute serves over 400,000 commuters in 53 municipalities across the state. Next slide. So due to the pandemic and the increase in teleworking, we've seen a significant reduction in traffic. In September, in fact, the MassDOT highway officials said there were 20% fewer cars on the road compared to the same time last year, and Boston traffic volume is down as much as 48%. A positive unintended consequence of the reduction in traffic and the pandemic is cleaner air. And as you can see from this slide, during shutdown, emissions were down as much as 30%, and a lot of this is because of so many of us working from home. So we'd all like to see the trend of reduced traffic and air pollution continue, and MassCommute TMAs are here to assist you with your commuting needs. We encourage you to continue exploring your green commuting options and log your green trips through one of our commuter management platforms, GoMassCommute.com and ecommuter.org, depending on which TMA you are a member of. And then finally, we have a couple of housekeeping items. This webinar will be recorded, and after the presentation, there'll be a Q&A period. We ask that you use the sidebar, the questions sidebar on your screen to enter any questions you have, and we'll do our best to get to all of them. And then at the end of the webinar, we're also going to be doing a drawing for a $50 Amazon e-gift card. So stay tuned in for that. And now we'll begin our program with our first speaker, James Kozik.
Thank you, Melissa. I'm just going to get my screen set up real quick here. Go. All right. So, as stated before, sorry, hold on, just fixing something over here. My name is James Kozik, and I'm sure that everyone here has been impacted by COVID-19 in at least some fashion. With such a change in the workforce and how people really commute to work, I think it's important to see what's been going on behind the scenes with taxes and how the stage has changed possibly forever since the pandemic. But first, just a little disclosure. This presentation is meant to provide general information only and is intended to only provide for your use. This presentation should not be construed to rendering of advice regarding specific situations. If you need specific tax advice about a personal situation, please consult a tax professional. Now, a little bit about me. I graduated both of my bachelor's and master's of accountancy at Rider University. I obtained my CPA in 2015, and then I opened my own side tax practice in 2016, preparing both business and personal tax returns. This eventually led to me joining the current company I'm at now as a partner at New Century Tax and Accounting earlier this year. So we're going to start off with our first polling question.
So just a quick poll, what type of tax form do you receive from your organization? Do you receive a W-2, you're a formal salaried employee, you 1099, or you don't know? So we'll leave this poll open for about 30 seconds. We'll let everybody get the chance to get their votes in. Looks like we've already got about 2/3 of the votes in, so nice job there, everybody. And then that way, that'll let James know kind of what your current situation is. All right, just a few more seconds. We're about to close the poll. Okay. So it looks like 96% are on a W-2. We do have a couple 1099 stragglers, and about 1% don't know what they're going to get. So there you go, James.
Okay. So what that's going to do, so this impacts your tax situation, obviously, depending on what type of employee or how you work for your company. So one of the biggest questions I've had received this tax season so far is about working from home and if my clients can claim the home office expense deduction. Now, these rules go along with the unreimbursed expenses, which are basically any expenses that you're not reimbursed for while doing work. In the case of a traditional employee, once you receive a W-2, these expenses incurred by an employee, the employer determines the benefits. So the employer can have one of four options. They can either pay for the expenses incurred directly, they can help out with some benefit programs that the company can offer, they can use expense reports that the employees submit and then the company can reimburse them after the fact, and then the other option is just not reimburse at all. The final category is the big category of focus this year, especially with everyone working from home. So examples of these costs would include home office deductions, as I said before, which would include portions of utility bills, internet, mortgage, rent. You have your office supplies that you purchase for. You purchase a couple pens just because you happen to need them and you're using them while working. Electronics, furniture, telephone lines, travel, computers, software purchases, and so many more. Before 2017, there actually was a section in the federal tax return in itemized deductions under Schedule A called the unreimbursed employee expenses over the 2% floor. So if you had expenses over a certain floor, 2% of your income, you would be able to deduct some of these costs on your taxes. Unfortunately, I hate to be the bearer of bad news here, but with the Tax Cuts and Jobs Act of 2017, these deductions were eliminated to make way for a more simplified standard deduction. Basically what that means is that for regular W-2 employees, there are no deductions of any home office expenses that you incurred. These provisions are set to expire in 2026. Obviously, completely up to regulations and if it gets renewed or not. And in all honesty, a lot of people were not exceeding the 2% floor anyways. So a lot of people weren't necessarily getting the benefit of this, of these unreimbursed expenses anyways. Now, we didn't, one other way that you can take some of these type of unreimbursed expenses and make them to your benefit is to sign up for benefit programs that are offered by your company. All companies get to decide on the benefit packages that they provide. Obvious ones like healthcare, retirement plans, but there also are some more detailed plans. Some examples that I've seen are group legal plans, cell phone plans, and qualified transportation benefit programs, which help share the cost of commuting into work. So that is the situation for most of the people on this call, as I remember, 96%. For the other group, you would be considered an independent contractor, and you're not a formal employee. Basically, what this means is that you're treated as a separate business entity entirely from the company that you're doing work with. Therefore, any expenses that you incur that are not reimbursed by the organization, you can deduct them on your tax return. Now, if you're in this situation, I definitely recommend consulting with a tax professional on the complexity of filing as a business. There's a lot of, different complexities. You have to make sure that you're doing very good record keeping. So I would definitely recommend reaching out to a tax professional. But what happens if an independent contractor is reimbursed for expenses incurred by the company? Say they allow them to they pay for their cell phone plan. Basically what happens is that amount reimbursed is added to their total income for the year on the Form 1099 that you would receive. And then the contractor has to make sure that they also deduct the costs on their tax return for a net zero transaction. Now, I'm sure a lot of people on the employee side are asking, wait, why can't I be an independent contractor? Why am I an employee? The IRS and the DOL have made a lot of guidelines on what an employee and what an independent contractor is. There are certain tests that are applied against each individual when being hired. And basically, that is the determining factor on whether you're classified as an employee or as an independent contractor. A lot of it has to do with general control. So a couple of examples are if the employer makes hours for the person, if they fully control their workflow, if they set deadlines, some things around those, that would be qualifying as an employee. If you don't meet these qualifications, that's when you would really be considered an independent contractor. It's more so they test you to be an employee, and if you don't meet that test, you become an independent contractor. Oops, sorry about that. So it's not necessarily better to be defined as an employee or an independent contractor. One big difference is that as an independent contractor, you wouldn't really be able to take part of the benefits programs that an employer would be able to offer. So really both sides, as with most classifications and most things in life, they have benefits and faults. It's more important to understand which category you fit in and how to make best of your situation. With that fully reviewed, let's move on to our next polling question.
Yep. So in 2020, how much / where did you work? So were you full-time work from home? Were you more often work from home than not? Were you a true hybrid where you were 50-50? Or were you in the office more? Or were you full-time office and you haven't worked from home? So again, we'll leave this open for about 30 seconds. We'll let all the votes get in. Right, we just got a couple seconds left, so if you haven't voted, go ahead and get that in. All right, I'm gonna close this out and we're gonna show the results. So it looks like we have about almost 50% worked full-time from home in 2020. More often than not worked from home at 43%. We have a couple true hybrids, a couple more often in the office, and then just 2% that were full-time office.
All right. Well, sounds good there. So then this next slide is going to be hopefully very helpful. So basically, skip again. The reason that we asked this question is that the population moving generally over to telecommuting, not as a matter of convenience, has basically hit the states especially hard, made them scramble to create new rules and regulations in order to accommodate what's going on in people's lives. So the rules are implemented only if something in your employment or your residential status has changed. So basically, for those people who are still commuting full-time, everything like that, you're most likely going to have a very similar tax return as last year. However, there are situations where people have had to change their employment status. I've heard of situations where companies have had to change employees from full-time to part-time, trying to save money during the pandemic. I've also heard of situations where employees couldn't be kept and were hired back as consultants, the situation of a 1099. Employers have to give directions to their employee and hopefully can help in the transition, especially if it impacts your benefit plans. It also is important to consult with a tax expert, especially in the situation that you move to a consultant status, as I was saying before, with the changing and complexities of your tax. The other thing that happened with a lot of people is that they took this opportunity to maybe permanently change their residence, or they had to temporarily change the residence. Temporarily, as in you were commuters who were commuted across state lines traditionally, and now you're told to work from home. But there's also a lot of employees who actually use this opportunity to completely move to a new state. This can put people into different situations, and because each state has its own unique laws. So definitely be prepared for a different kind of tax return. As an extreme example, an employee moves to New Jersey or to Texas from New Jersey, would have to file a New Jersey part-year resident return and then no Texas return because they don't have state income tax. Just as an extreme example, some of the things that I've heard that have already happened during the year. So with that, let's go to our next polling question.
Yep. So prior to 2020, did you commute across state lines? Yes, I live out of state, or no, I work and live in the same state. So I know we've been getting a lot of questions in the questions panel there on the right, just asking about the New Hampshire, Massachusetts situation as far as what that means for taxes and working from home in New Hampshire specifically. So we're definitely going to get to that. So hang tight, everybody.
Yes, yes, that will definitely be addressed.
I'll leave this open for a few more seconds, let everybody get their votes in. All right. So it looks like about 3/4 live and work in the same state, so that's good.
Yeah.
As far as taxes, simpler. But then, yeah, there's about 26% that do live out of state.
There we go. So probably where the questions are coming from. This has become, will become an issue in the near future, as some states are trying to proactively address the situation. As an employer, the employer must identify what states their employees really work in. This was easy to identify when everyone was going to a physical office. It was wherever the office was. However, with these work from home provisions that are not a matter of convenience, which state does the employee technically work in? To determine this, every employer must determine the economic nexus of the work being done. And nexus is just really a fancy word for a requirement to collect taxes. In general, as I said before, if there's a physical presence of the state, that automatically creates nexus. However, in a situation where all the employees are telecommuting temporarily and they live outside of the state, the question really becomes, does that create nexus due to a physical presence? Now, a lot of states have gotten ahead of this because of the unique nature of the pandemic. So some states have made laws that shelter-in-place restrictions will not create nexus for employers. Other states have gone the other way and said that it actually will create a nexus, and you have to make sure that you're properly filing for your employees. There's also a whole host of states that haven't even formally addressed the issue. This is an evolving issue every minute and will only continue to cause more changes in the near future. Maybe it'll be very important to keep up to date with your state laws and frequently reach out to your tax professional and employer to keep you in the loop about updates, especially considering if certain states start to disagree on the treatments. And that is definitely the case with New Hampshire and Massachusetts. So on October 22nd, New Hampshire officially filed suit against Massachusetts for its taxation against telecommuters in the Supreme Court, saying that New Hampshire residents now working from home do not have to pay Massachusetts state taxes when they are really working from New Hampshire, which of course also has no state income tax on earned income. They filed the case with the Supreme Court, but no decision has been made yet, at least as of the time of the writing the presentation, hearing the case. However, as of December 23rd, 14 different states and 18 organizations have petitioned the Supreme Court to take the case. Now, if the Supreme Court decides to take this hearing, it will likely create a domino effect of multiple states filing suits against other states. And this could create long-standing litigation issues and massive changes coming to some of the largest cities in the United States. One huge example would be of New York City, which really thrives off the employment tax of 1 million of transient workers. Since New York City has both a local New York City tax and New York State income tax, the amount of tax revenue lost for both would be huge and would likely lead to major changes in how they prepare their tax code. Companies and employees alike need to be prepared for what changes may come next. So listening to the news about these cases, I think, becomes critical to future tax planning on more layers than just the surface. So now we're going to go to another polling question.
Yep. So just a quick one. Did you receive any unemployment benefits in 2020? Yes, I did. No, I did not. I did, but I did not, but my spouse did, or both my spouse and I both did. Go ahead and leave that open for about 30 seconds. Let everybody get their votes in. Just so we can talk about how unemployment benefits might affect our 2020 taxes.
That's correct.
All right. So it looks like about 90% did not receive any unemployment benefits. We have 4% that did, about 6% where their spouse did, and about 1% where they both did.
Okay. All right, so all over the board. So kind of similar to what's going on with withholding, it could also eventually cause problems with unemployment. So if you work in Massachusetts but live in Rhode Island and you are terminated from your job, who would you really reach out to? In order to collect unemployment, you would actually reach out to Massachusetts, since unemployment is based on the state of employment, not the state of residence. Not a lot of changes has happened so far in this realm. So it's not a necessarily like you really need to start paying attention to this right now, but if these changes start coming down the pike, if states start disagreeing on how shifts are handled, there could be some issues that really come up. For example, each state has different filing methods, so employees would have to know the correct method in order to properly receive benefits. Some states also withhold unemployment taxes. I know where I am in New Jersey, they withhold disability, unemployment, multiple type of things. So as an employer, the employer has to make sure that they're withholding in the right states and the right pieces to make sure that everybody gets their benefits properly. Also, it becomes an issue with part-year filers. Making sure as an employer and employee that you are accurately reporting the state of residence employment, because we want to make sure, you would want to make sure that you're getting the full benefits that you need, and that there are some spaces in the rules right now where you can receive some unemployment even if you are part-time. So what's really our next steps? Really what I would suggest is to talk to your employers and to talk to your tax professionals. Since everything isn't set in stone yet, it's important to keep up to date with all the possible changes coming that we discussed in this presentation. Both of the above should be aware of the situations as well and would be the best in helping guide you make the best decisions. Some of the other issues that are also impacted due to this year is the stimulus checks. Hopefully you got them, maybe you didn't. But these need to be reported on your taxes for 2020. And if you didn't receive the full amount of the stimulus, you actually may receive the remainder as a credit on your 2020 tax return, depending on your situation. Also, there's been a lot of questions about the filing date. So we already know that the e-filing, the first date that you can start e-filing tax returns was already pushed back from January 31st to February 12th. Is this a sign of the due date being extended again, like last year? At the federal level, there's been no indication made, but it seems kind of likely. I feel like that's kind of the general thought process. So definitely keep in the loop and keep reading the news and seeing what you can see. And if you happen to need a tax professional, feel free to reach out to me and my firm. We're down in Cranberry, New Jersey, but like the rest of the world during this pandemic, we are fully digital and we're able to help you meet any of your needs. We do tax preparation and accounting advisory, and we also do bookkeeping. Or if you just have general questions and want to talk, feel free to reach out to me anytime. My contact information is on the screen, my phone number and my email. So I would definitely love to hear some of the questions as well, if we don't get to address all the questions at the end of the presentation. So thank you very much for listening in on my presentation. And up next, we have Dana from the state of Massachusetts to discuss more about what's happening at the specific state level.
Thanks. Let's see if we can do this transition pretty smoothly. It's always a challenge. All right, hopefully you are seeing my slides.
Yep, looks
I'm
great.
Dana Ackerman. I'm Dana Ackerman from the Massachusetts Department of Revenue. I'm the Taxpayer Advocate at DOR. I've been with DOR for over 35 years, which seems pretty crazy, but it is true. And I've been the Taxpayer Advocate since 2015. In the time I've been with DOR, I've had a lot of different positions. I started out in the contact center on the phones, and all my jobs have been on the customer service side of DOR with training and communications and customer contact. The advocate's office, if that's not a familiar term for you, our job is to represent taxpayers in discussions that happen within the Department of Revenue. So I am always trying to put myself in the seat of the people on the outside and think about how what the Department of Revenue is doing impacts you. I also oversee the Department of Revenue's Problem Resolution Office, which is sort of like a specialized customer service office. That staff, there's only a few people. They handle issues that have just gotten a little bit out of control, that haven't been able to be resolved through normal channels, and that office is available both to taxpayers and to tax professionals who just need help getting through something that isn't working. So state taxes, I think, in my view, are often somewhat of an afterthought for people. Everyone thinks about the federal tax laws being so complicated, and everyone talks about the federal tax laws. And of course, usually your federal refund is a lot bigger, so it always gets more attention than the state. The state laws a lot of times are similar or the same as the federal laws, and that makes it easy for people. It's when they're different, I think, that it's usually a challenge. So this first area that James talked about in great detail, which is helpful for me because I don't have to repeat it all. This is an area of business expenses where Massachusetts law does line up with the federal law for the most part, and that makes it easy for everyone. So James made the distinction between employees who are receiving a W-2, and unfortunately, I'm going to say again that your expenses, your working from home expenses, are usually not deductible under the current federal law, which the state law follows. If you're self-employed and you're filing a Schedule C, most of your expenses are going to be something that you can deduct. But again, Massachusetts law lines up with the federal law, so you don't have to worry too much there about special state rules or any complications at the state level. I do want to note Massachusetts has a deduction for self-employment taxes paid if you're self-employed. And that really lines up with the deduction that as employees you might be familiar with. You have a deduction on your Massachusetts return for Social Security taxes paid. So those are basically the same deduction. They look a little bit different depending on if you're self-employed or if you're a W-2 employee. Also, if you're self-employed, and I know there's not a lot of you in the audience, if you're new to being self-employed, if maybe you started a job on your own during the pandemic, which a lot of people have, you want to make sure you're thinking about quarterly estimated tax payments because you no longer have an employer who's taking taxes out for you. And I think James mentioned this too, record keeping is really important. If you're self-employed, you really want to keep track of what expenses you have so that you can properly deduct them. And yes, I agree with him also that if you're self-employed, it's really important to, or you really should think seriously, I guess, about having a tax professional help you, because there's a lot of complication with filing taxes if you're self-employed. James also mentioned some of the benefit plans that might be available to you as an employee, and a lot of those Massachusetts does follow federal guidelines on that too, with what we would call fringe benefits. The one I do want to mention that we have different thresholds than the IRS, and this is mostly an issue for your employer. Hopefully they're getting it right. But the qualified transportation fringe benefit, if you have or had train passes, T passes, commuter rail passes deducted from your pay, there's different thresholds that are allowed to be excluded from your income between Massachusetts and the IRS. But again, hopefully your employer has that covered, and it's not really something that you need to worry about. James talked a lot about the importance of knowing your state rules, and I would say that is very much true. It was always true that if you lived in one state and worked in another, you had a little extra complication with your state taxes. If you move and you have part of a year in one state and part of a year in another state, that's going to add a little complication to your state taxes. And those things don't usually impact your federal taxes. But it's a time where your state taxes need to, I guess, be given a little more priority when there's issues between the states. If you live in the same state you work in, lucky you. That's when it's easy. But when there's multiple states involved, it can get pretty complicated. Massachusetts is one of the states that put out some special rules related to the pandemic, and the whole idea behind this is to keep things status quo, because we believe this is a temporary situation. So if you used to work in Massachusetts and now you're working from home in another state, we're saying that is still Massachusetts income until the pandemic ends, or until the Massachusetts state of emergency ends, at any rate. And it works both ways. The rules also apply to someone who is a Massachusetts resident who used to work in another state. There's kind of two parts to this. Certainly these rules make it easier for employers. They don't have to figure out where all their employees are going and change employees withholding in a lot of random ways that they might not usually have to deal with. For the employee, sometimes it makes it simpler, sometimes it doesn't. It depends on your individual tax situation, really, how these rules might impact you as an employee. But again, the intent is to minimize any tax impact, any tax changes that need to be made for what we think is a temporary situation. It is true that Massachusetts is being sued by the state of New Hampshire, and we'll be watching to see what happens with that lawsuit. We don't yet know whether the Supreme Court will even take it. We probably won't know that until after filing season is over, after tax filing season is over. Certainly, if they do take it, we won't have an answer for many months after that. So this is going to be something ongoing, and if these special pandemic rules apply to you, it's something you would want to keep an eye on. And I think this year, if you have this kind of a situation, even if you've always done your own taxes, it might be a good year to check in with a tax professional to make sure you're doing things the right way. I want to give you a couple references that you could look into if you wanted the real details of these the pandemic rules for Massachusetts. We issued a technical information release, which is a type of legal guidance, and we also issued a regulation. Both of these things can be found on our website. I've given you the address mass.gov/DOR. We probably will be issuing more about this. I expect guidance that will give some examples that I think will be really helpful for people. And I'm also giving you here our contact center phone number. If you have specific questions about your own situation, you can call us, and we'll try to talk through it with you and figure out figure out an answer for you. Massachusetts does have the same due date as the IRS for tax filings. So right now, April 15th is the due date. We don't know yet if the IRS will be pushing back. If they do, more than likely Massachusetts will go along with it. But right now, we're planning on an April 15th due date. I do want to touch quickly on something else that James mentioned. We had a question earlier about unemployment, and this is actually perhaps more for people who did not receive unemployment. You may have seen in the news that there's a lot of unemployment fraud, and this is not just a Massachusetts issue. This is across the country. Because there were more benefits available, there was a lot more fraud. So some people are receiving documents that say they received unemployment when they did not. And if you're in that boat, I want you to know you don't have to report that income on your taxes. You should not report that income on your Massachusetts tax return if you didn't actually receive the income. But you want to make sure you file a fraud claim with the Department of Unemployment Assistance. They have an online fraud claim, and you want to do that to get it straightened out, but it doesn't have to tie up your tax filings. I guess that's really all I wanted to cover today, and I know we have questions to get to.
Great. So thank you so much, Dana and James. That was super informative and helpful, and we definitely have a lot of questions that are coming in. So we'll start with that. And I just want to remind everyone that we are doing that $50 drawing at the end. So if you could hang in there with us, that would be great. And Sophia has been managing the incoming questions. I'm going to turn it over to her to ask those.
Okay, thank you, Melissa. So here's one. I live in New Hampshire. Last year, I paid mass taxes on 60% of my income. Will that rate carry over to 2020, or will I be taxed on 100% of my income?
I'm glad you're giving me a chance to clarify that, because there's been a lot of confusion there. And if, generally speaking, if you were paying mass tax on 60% of your income last year, because that was like your telecommuting percentage, I'm guessing, it stays the same. So there's no case where all of a sudden Massachusetts is going to tax 100% where you were not working in Massachusetts 100% of the time previously. So we would have you look back to your percentage from 2019, or perhaps your percentage from January and February 2020. That can also be used as a look back period if you prefer, or if that makes more sense, depending on your situation. But definitely in no case are we saying that all of a sudden it's 100% mass where it was not before.
Okay. Thank you. So if I didn't receive a stimulus check in 2020 because I was a dependent in 2019, but in 2020 my status changed, is there anything I need to do to show my status change, or will I automatically receive a tax credit?
Okay, so basically you filing the tax return as a single individual, not as a dependent, just make sure you file it that way, and you should technically get both credits. You should be able to then get the $1,800 credit on your tax return, because all they had to go on was 2019. So now that 2020 is here, or well, the 2020 tax return, thankfully the year's behind us, but you should actually receive that credit after the fact. So I definitely would make sure, and also make sure that whoever was claiming you as a dependent doesn't claim you this year. That obviously changes things as well.
Okay, thank you. Okay, MA has passed TRR 20-10 and CMR 62.5A.3 for those working from home due to COVID-19. My company has passed a formal telecommuting option effective 8/1/20, which I signed up for, and I'm working exclusively from home in New Hampshire now. Is there any MA income tax benefit?
Well, regardless of your company allowing new telecommuting now, we're still looking back to what your situation was before the pandemic. So and I want to note, you made a reference to TIR 20-10. 20-15 is the updated one. There's not a lot of difference, but we always want to look at the more recently issued document. So for Massachusetts, that's still going to be Massachusetts income as long as we're under the pandemic situation.
Correct.
Okay. Thank you. My son had both W-2 and a 1099 income, $5,000 each. TurboTax indicates a $500 federal refund, yet a $44 is owed to Mass. Can you explain why?
So generally with those, it all becomes an issue of withholding, which in reality, the reason why is because they withheld more federal tax on the W-2 than they withheld Massachusetts state tax. They were probably actually a little bit closer with the correct number that they should have withheld on the Massachusetts side, because that's where you're going to see that $44 come out. Because a 1099, they never withhold any taxes. They expect the taxpayer to properly address that issue. So, and especially with the change in the tax laws from 2017, the Tax Cuts and Jobs Act, the withholding tables have gone kind of, they're still working through all the kinks of the withholding tables. And so you probably got more withheld on your federal side because of whatever you put on your W-4. Basically, whatever your W-4 form is when you signed up with the company. So every year you could change your W-4 if you wanted to come closer to zero. But that would probably be the reason why, I would say, is just because of how your company ended up withholding your W-2 wages, and that it withheld more on the federal side so that it was able to make up for the new income, but it didn't withhold enough on the Massachusetts side to make up for the expense that was coming through.
It's possible to have, if this is an ongoing situation, you could do a new state M4 for just to increase your state withholding to cover that other income if you want to. Right. Or I mentioned the idea of estimated payments. If you're getting 1099 income, that's another way to go. But if it's small, sometimes it's easier just to increase your state withholding on the W-2 a little bit to take into account some other types of income that don't have withholding.
Okay, great. So my office is in Mass, but I'm working at home, and I've been working at home since March. If we file and pay Mass for the full year, and then New Hampshire lawsuit goes to the Supreme Court, and they determine that we are due the dollars back, would we file an amendment return to get the dollars we paid in 2020 back?
That's what I would expect. I mean, I hate to do too much predicting, but I think yes. If New Hampshire wins the lawsuit, probably we would be announcing that people should file amended returns. But that's projecting a little bit. But just with the normal way taxes work, that's how I would expect it to go.
Okay.
I agree too.
Good. Okay. So I've been working from home since March. I work in Mass, and my W-2 says I work in Mass. Can I do apportionment on my Mass NR tax return, even if my W-2 says I work in Mass and not a telecommuter?
I wouldn't. I wouldn't, because no rule has changed yet. So technically you're not following, and the law currently states that everything is status quo until something else changes. So technically, then you're not really filing properly. That's what I would assume.
Assuming that you fall under these pandemic rules and that you're at home only because of the pandemic, that's true. It says you're all in mass, and that's what you were before, then we're considering you still to be all in mass, so you wouldn't be able to apportion. We'd be looking to your previous filings to see if you apportioned previously. We're going to be looking for it to be roughly the same percentage for most people. There's certainly always room for exceptions, but for the most part, we'll be comparing to previous history as far as that apportionment goes. Which kind of goes back to the first question with, if you were 60% before, are you still 60%? And generally, yes.
Okay. All right. Would I get any kind of 1098 for pandemic release fund for tax filing?
For a pandemic. So on that end, like you received one of the like an EIDL loan kind of thing, or I guess that's the question. Generally, no. I don't think they're handing out any type of forms for. I'm gonna take it as that would be like the PPP loan or the EIDL loans or any type of loan like that with the SBA. I would say no, they're not going to hand out any of that. Generally on the business side, they kind of just say, hey, you know your records and you know your stuff, you put it on the form and we'll look at it after the fact.
Okay. So if you work from home in another state, then the pandemic caused Mass to declare a state of emergency, would you be responsible to pay taxes to Mass?
If you were working in Massachusetts previously and you're still working for the same employer, but now you're working from home in another state, yes, you would continue to pay Massachusetts taxes.
But alternatively, if you were remote working before the pandemic,
right,
and the pandemic happened, then where does the responsibility lie?
Then you essentially you stay the same as you were before, whatever that is, whether it was 100%. If you were 100% working from home, you were not paying Massachusetts taxes, then that's where you are now. If you were partly working in Mass, then it would stay the same percentage.
Okay.
It's far from simple, but basically status quo is the goal. Keep things the same as they were previously, assuming same employer at least.
Right.
Now, if you got it in February, then you'd be lucky, or then you'd have it right.
Okay, this might be more of a clarification question because I do think I recall you talking about this, but using personal cell phones for work, are those tax deductible at all? Are they partial, full, or none?
If you're a W-2 employee, no. If you do use your personal cell phone for business calls and you're an independent contractor or you file as a business, you would be able to, and you'd kind of have to set up kind of a percentage of usage situation where, like, you know, I use it 30%. This is how much I can deduct of my bill. That's essentially how it would work.
So what if an employee and employer agrees that the employee can permanently work from home in New Hampshire for a Mass employer?
At this point, while we're still under the pandemic, we're saying that the pre-pandemic rules apply. So we're not to the new normal yet, where you could make that kind of a decision until we're beyond the state of emergency.
Okay. And what is the effective date of the change in Mass tax? What date did it go into place?
I believe it was March 3rd. That's the effective date of the state of emergency. And it was around there. I'm not 100% positive that's the exact date, but I think it is.
Okay. And with so many different tax practices out there, how do you choose which one when it comes times to filing?
Well, I feel like a lot of it is if you get along with the people and you can trust the people that that you work with. That's how I feel like at our firm we kind of distinguish ourselves, that we try to be very personable and we really like to get to know our clients and make them really feel like, because we really are here to help you, and which is not necessarily in every case or in every profession, but really we're really here to help you get the best out of your situation. And I feel like having someone that you can trust and having someone who really knows the information and can present that to you without having to say, oh, you have to sign this, that, and the other thing before I even talk to you about something. That's just me personally. But I really feel like if you have a connection with the professional that you have, I think that's the biggest key.
Okay. So this is another Mass New Hampshire issue. What if there is a role or manager change? Can we then use those events to change his telecommute status? If yes, are there any other qualifying events?
I guess I don't want to guess on that one. I think that's a good one to give the Department of Revenue a call, and we can talk through that. We've been putting together a lot of FAQs, and I just I don't want to say the wrong thing there. That, you know, we've talked a lot about changing employers, but changing functions within a job. There's been less conversation, and that's a really good question, and I don't want to steer you the wrong way here. Sorry.
Okay, all right, that's fair enough. Am I eligible for unemployment if I open my LLC only member and now I closed it because I have no clients? If so, how would I apply?
I would think so. If that's the job that you had, that basically was the job that you had, I would say that it would probably, you would be able to file unemployment. Again, that depends on the state. Generally, every state has their own website that you can kind of go to, and it's usually based on a loss of income, or from what I've seen is that it's a loss of income. So that you should just be able to file the same thing, or the same rules that a regular W-2 employee would, and file it that way, especially during this pandemic.
So just to follow up on that, you'd have to prove that you've lost income. Like last year,
Correct.
say the LLC had X amount of dollars, but this year you didn't, and then therefore that's what helps determine that.
Yes.
Okay.
Okay, and it looks like, I think this may be the last one. Is there any difference between regular unemployment income and pandemic unemployment income, PUA, when it comes to tax filing?
No. No, it's actually all recorded the same. And it's only done on the federal side. So, right, that might be a New Jersey law, that it's really only reported on the federal level.
For Massachusetts, it's all taxable, the
All
same
taxable.
as the federal. So it's all on your Massachusetts return. The one thing to be careful about is you may or may not have had Massachusetts tax withheld. That's an option. And for the PUA, at least early in the process, it might not even have been an option. So it's possible that you have taxable income without taxes previously withheld, and we expect there will be people who will owe money when they do their 2020 return for that reason, their 2020 Massachusetts return. So that's an unfortunate side effect there, but the unemployment is all taxable for Mass, the same as the federal.
Melissa, I think that's it.
Okay, great. Thank you.
Definitely all we have time for.
We're about 5 minutes out. Perfect timing. So thanks again for the presentations and the great questions. And again, reach out to the tax professionals if you have any specific questions, or feel free to reach out to your local TMA. And I'm sure everybody's TMA will be following up with them after this anyways. So now we're going to announce our winner, and the winner for our $50 e-gift card is Michelle Roche from Schneider Electric. So congratulations.
Michael
Oh,
Roach.
Michael, I'm sorry. Michael, I'm sorry.
Yeah.
I'm sorry, Michelle. Michael, congratulations, and we will send you your e-gift card shortly after this webinar, as well as we'll be sending everyone the recording of this webinar. So thanks so much, and have a wonderful day, everyone.
Thank you, everyone.
Thank you.